Hey, welcome to this financial lesson in the Shred Coach. And this is an important one that I think is so powerful for your business, for your way of thinking about how you operate, especially in a time when the financial implications of your staff with raises, with higher fees associated with staffing right now, really important. And today what I want to talk to you about is this thing called salary cap. And salary cap is a mechanism whereby you can begin to understand what's going on in your business and think about a specific set of expenses in a certain kind of way. So let's dig in. So salary cap is something you've undoubtedly heard of in professional sports. Professional sports teams within a league like the NFL, so the National Football League, let's use that as an example, tend to create a mechanism whereby they ensure parity among the different teams. And by ensuring parity, they issue something called a salary cap. And the salary cap is the maximum amount you can as a team pay for your entire roster of players. That salary cap then is in the case of professional football is a combination of TV rights, income that comes in from TV, league distribution, all of those and it's a complex formula that gets you to that result. But the interesting thing about salary cap is it's a mental model that you can use to help structure the way you think about how much you can afford in salary based on your business. So we're going to take that salary cap model from the football or the professional sports world and translate it into your business and your shredding and destruction business, because it's really powerful as a tool to think about it within that structure. So why salary cap? Why do you think we should think about this? Why do I think you should think about this? Well, I think it's really important because the first benefit of a salary cap is it helps you to create year over year comparatives and targets. So it allows you to look at a previous year, the year before that, within a specific way of looking at targets within your business or comparatives in terms of what did we do in a previous year related to salaries and what we paid in salaries. The second reason is we want to protect profits by managing my maximum salary spend. So we're going to dig into this a little bit further, but it's really important to know that salary is one of those areas that as you bump it up, the direct impact is usually on my profits. Because salary is often in your business the largest complete spend in your business, the more you spend on salary, the more likely your profit is to drop if you don't understand the implications of salary cap. So we're going to deal with that, but before I get there, I want to talk about profit a bit more. I want to dig in on profit because a lot of times if we think about salary cap, but we don't recognize the importance of the connection to profit, we miss something. So profit is so important because it's not just the stuff that comes out after you've paid all your expenses. And a lot of times employees think that. They think you as an owner, you as an operator, you as a CEO or shareholder in the business get all the profits out of the business. That's not true. I like to think about profits divided up in a number of ways. The first is buffer capital, and buffer capital is the reserves I have. I use my profits to hold cash back in the business in the event that an emergency happens. And buffer capital, the minimum you should have in your business is 2 months of operating capital if you never got any income coming in. That's buffer capital. So you use profits to fund buffer capital. You use profit to reduce debt or line of credit. That's a really important part of profit. Profit does that for you to reduce that debt or line of credit. Profit helps you hold back a war chest to fund projects. So let's say you're planning on buying a new truck and you're not going to finance the thing completely, or you need to at least have a deposit on it. Profit allows you to fund projects. So that's the importance of profit. It also is critical that your profit helps to support some tax reserves in your business. So you got to hold back for tax to be able to pay the tax implications in your business, even if you're a flow-through kind of business where all profit passes to you as the owner. It's really important to understand the power of profit. And it's not until you've done all of those things that we distribute what's left over to shareholders. So I'm telling you that because the whole purpose of focusing on salary cap is also to ensure that you never lose your profit, because profit's what ultimately keeps you as a stable business. So back to salary cap again. Helps us create comparatives and targets. It helps protect profits by managing that max salary spend. And then it helps me to understand the implications of what happens when I exceed my salary cap. And I'm going to dig into that a little bit further, but that's the reason I want to look at salary cap. So best way to think about salary cap is a pie shape. And from your profit and loss statement, we kind of put that into a pie-shaped system that helps us to think about major categories. I like to call them buckets, major buckets within the entire P&L system. So everything's held in the pie chart from the P&L, but they're all in big buckets. So what are those buckets? Well, the first bucket, which is the pie itself, is gross revenue. Every dollar you take in, including paper, including recycling, every dollar you take in becomes your gross revenue. Cost of sale is everything that comes off before you see the money. So if you're getting credit card payments for shredding, that's a cost of sale. If you're outsourcing your operations in a marketplace, within a couple of hours of you for a client, and you have to pay a vendor to support that, another shredding company to support that, that's a cost of sale. Anything that goes away when a client doesn't pay, a specific client doesn't pay, would be considered a cost of sale. That leads you to your gross profit or your gross margin. And then below that, you have this big number here called salary expense. And salary expense is everything I pay to people in my company. We'll talk a bit more about that. Then this other bucket is all other operating expenses. Every other operating expense, that's that part of the bucket. So everything else, trucks, and I'll talk more about this, but all those other things that you spend that come out of your P&L, if they're not salary expense, they go in that bucket. And then the final bucket is really the end of the line, which is profit, which is critical to the success of your business. So if we understand that there's really essentially, when we do this, there's gross revenue, there's salary expense, there's all other operating expense, and really ultimately you can bring cost of sale down into all other, and then the fourth one is profit. Those are the four pieces of the puzzle I'm most interested in this conversation. If we understand that, and we understand that that's how we break it down, I want to be really clear on what a salary expense is. So salary expense is all salary and bonuses paid for everyone who works on your staff. Drivers, admin, sales reps, you. It's salary plus bonuses. Second point here is it's unburdened. Unburdened means there's no payroll taxes or benefits connected to that number. Why do I do that? Why do I suggest that? Well, it just helps you to keep clean numbers, because you can throw different numbers at different things. And in terms of payroll taxes and benefits, it's a relatively small number, but it's not the number you typically think of when you think of how much you pay. You tend to think I pay somebody $65,000 a year. That's this salary number. And we give them a $10,000 bonus. That's bonuses. That's the number I want you to focus on as it relates to salary cap. Not all those peripheral extras, taxes you have to pay, the benefits you do, the training, all that kind of stuff that comes as a part of being, it's like a labor expense more than the cost of labor. So it's unburdened. So a salary expense is everything in your business that's paying the salary and bonuses for everyone on staff, including you, which means number three, you have to understand the reasonable salary and bonus that you would give yourself. That's an equivalent of that. An equivalent of what you're worth in the marketplace. And this is really important because you really don't understand how effective your business is unless you understand how much you should be paying yourself for the roles you play. Something that I learned early on and has been really helpful to me, and this is not. I realize you may have a way you work with your accountant to reduce taxes and things like that. But the thing that was really helpful to me when I learned this, and I'm telling this to you, is that salary is what you as an owner operator get paid for what you do in the business. Distributions and profits that come out at the end are what you get because you own or are a shareholder in the business. And a lot of times what happens is you play weird stuff with your financials, especially to appease tax management and tax accounting, which you're more than welcome to do. But what it does is it skews an understanding of how much your business costs to operate, and it skews how you think about growing your business. So it's really important that you understand that your number has to go into that salary cap number, that salary and bonus that's unburdened. What should you be paying yourself on a weekly, monthly basis, along with potential bonuses, that makes you reasonable. If you're in the US and you're an S Corp and you have flow through, you're getting paid distributions from your business, it's required of you that you have a reasonable salary built in. How do you get that reasonable salary? Go to salary.com, Indeed, different places like that, and compare a business your size, a shredding business your size. And I would recommend you check out things like what does Shred It pay a GM in their local market. You can often get that information from Indeed, salary.com, places like that. So it's really important that you understand that number. That all becomes part of your salary expense. Make sense? So when you're pulling apart your numbers, salary expense is everything you've paid your staff, both cash and or check and bonus, regular paycheck and bonus, unburdened, so no payroll expenses attached, no benefits, no training expense, no parties that you throw for the staff, none of that, and a reasonable equivalent number for you, a reasonable equivalent that's equal to what you would be paid in the market for doing the roles that you do in the business. All right. Let's then look at that other bucket, the other operating expense. So in this other operating expense bucket, we have things like cost of sale. I already talked about that. Trucks, equipment. It's a significant part of your business, and it's one of the pieces of the puzzle that you're constantly looking at. If you're looking to buy a new truck, you're looking to buy a new box truck, you're looking to invest in equipment, say a baler, things like that. That is in that bucket. That's an expense that you have every month. It's consistent. But once you get that in place, generally speaking, that number stays relatively stable over time. Facilities and overhead, same. Your facility, you rent, whether you're renting from a third-party owner, whether you're renting back to yourself in a separate LLC, however you do that, your facilities and related overhead for running your plant, running your system, running your operations. I call that overhead. So your water bill, your all of everything else that comes associated with having a facility. Fourth one is your marketing expense. To me, that's a big enough bucket to keep it separate. And yet what I've seen in most P&Ls I've looked at is that that marketing expense, once set, yeah, you might have some fluctuations, is a relatively stable number. People extras, payroll taxes, benefits, team stuff you do for the team, training, everything that goes along with salary and bonuses, but isn't in that bucket, sits here. And then there's all the other expenses that you accrue, professional expenses, different things that happen. Some of these they fluctuate, but most of these from 1 down to 5 are pretty stable. This one sometimes just has like weird things that you have to do because you have to do them. So I'm going to leave that. So you've got your salary, your unburdened salary bucket. You've got your other operating expense bucket. And now I want to just give you an example so you can see this play out. So I want you to see this because it's a really important way to look at these numbers. So if you see the P&L in front of you here, I'm giving an example of let's call it $1 million shred truck operation. This $1 million shredding operation, truck based. And, if we're looking at $1 million, we're probably looking at 3 to 4 trucks, a staff of maybe 10 to 12 people. And so let's just dig in. And this is just a million's an easy number. So that's why I'm giving you $1 million. Let's assume your cost of sale, credit cards is 3%, usually 2.95, 3%. And let's say you outsource 1 or 2 projects to an outside source. Let's assume that you're paying $85,000 for that cost of sale, which gives you a gross margin of $915,000. Okay, so we've already established we got an 8.5% cost of sale. Now let's add this. So I like to really break it up. Team salary and bonuses, again, unburdened. Let's put their number in, 280. Let's put my equivalent in. Even if I'm not officially paying myself that, I want to add that into the mix. So what do we see here? We see that our total salary percentage of total revenue is $400,000, 40%. So we're looking at that and we know that this is our salary number. That's the salary number we have. We start looking at trucks and equipment. Let's call it, we spend $100,000 on that. That's trucks, equipment, fuel, things like that. Facilities and overhead, that's rent and extras. Marketing and sales, I'm spending 7%. And you see the whole thing unfolding here to give us this final number of $127,000, so 13%. Now, I show this example because it's really important to understand the implications of why we're talking salary cap. A salary cap's job, remember, is to help you look at comparatives. So when you go back into your P&Ls from previous years and you start documenting this, document in a way that allows you to add these percentages beside that. What you begin to see from doing that when you start monitoring these things is you see that in a certain year, let's say you had staff, but you were paying them. You hired a manager, let's say, and that manager cost you a little bit more. So we've just put in that manager's expense here, and look at, we've popped up our total salary percentage of the pie up to 42%. But here's the interesting thing. While most of these ones remain pretty static, the direct impact of salary goes to profit. So we had a 15% when we were at 240, and now we dropped to 11% because we've jumped to 300. That's why you're modeling this out. And it's really important to understand this number, because what you want to get to is that you've got a good understanding of what this number becomes. So eventually you can model it out that this becomes your cap rate. I don't want to exceed this number. So for instance, after doing some modeling, I might decide, and I play with this a little bit, I might decide that the maximum I should spend to ensure that I've got a 15% profit is 40%. Let's call it 40%. So if I need to go down to 280, let's see what that gives me. That gives me 40%. I'm up to 13. Now what do I do? Well, I got to maybe adjust something somewhere else. Maybe this operating expense has to come down to 65,000. See, I hit my 15%. Now, that's not what a shredding operation looks like in perfection. It's just an example. It's just the example I'm using for now. But in trying to make sense of it, it's really important to show you that, because you begin to see, you can access that Google Sheet. It's linked below here to do your own projections, and you can copy and paste and really build out your structure. But here's the next steps for you. First step is review your profit and loss statements from 2019 through 2021. Do it as best you can. Again, you really ultimately only need those 4 buckets: gross revenue, salary expense, including your reasonable inclusion in that, unburdened, all other operating expenses, and that leaves you your profit number. See how that's played out over the 3 previous years. And when you get that number, be really sure that you're getting the kind of information you need for the past 3 years to create some comparables for you and some things that will allow you to look back and use that as a idea of how to forecast a 2022 cap rate on your salary by percentage. And you're going to find, if you're effective, that to really be effective in your business, you need to have that profit margin of 15% plus to even make it work for you in the long run. So your job is to really figure out what can you maximum afford to spend in your cap, in your salary cap, to ensure that you've got a 15% or higher profit line coming into the end of the year. Now, that's really important because in 2022, we're all experiencing significant growth in our salary cap number. Employees cost more. They're coming in at higher labor cost. So it's really important as you flex your muscle this year, your financial muscle, that you're understanding that cap rate. You're understanding what you've got to do in terms of growing your top line revenue. And I think we all think about that a lot of times, but what we're missing sometimes is grow top line revenue, understand the implications of that salary, total salary number that you're spending, that manages your profit margin on the bottom line. So if I know my salary cap target, the first thing I know is I can protect profits by capping my max salary spend. And then I understand the implications of adjusting those spend levels across those various cost buckets. So part of this is historical, but historical helps to set you up for forward looking as it relates to the way you look at your financials. But it's a number that you need to have in your head. I know in my head what I can afford to spend as a cap rate on my entire employee base in my company. I know what my cap rate is. I can't afford to go over that. If I go over that, bad things happen to my profit, and profit's the thing that drives stability in my business. So take that Google Sheet and extract it for yourself, use it as a tool, but work on your understanding of your internal cap rate, your salary cap rate for employees and yourself, to give you a result. So that's all for now on this one. It's a big topic, really important topic for you in your shredding and destruction business. And I hope that this process of explaining it to you has helped it to gel in your head so you know what to do with it when you go forward. Hey, we'll talk to you again. Thanks.